Welcome to the second part of the 13th episode of India Shining YouTube series. So in the first part, we had seen a lot about the international events that can play positively for India. Now in this particular part, we are going to talk a lot about the macros, and in the subsequent parts, we are going to talk about the national events, the trends, and a little bit of corporate news. On the macros, there's a lot of positive news. The first positive news being that as of 22nd September 2021, the net collections of tax is around 5,70,568 crores when compared to 3,27,174 crores for the period 2021, for the corresponding period in 2021. So in this, there are two sides to it. This is the direct tax collections we are talking. In the direct tax collection, there are two components. One is the corporation tax and another is the personal income tax. In the corporation tax, we have seen a collection of around 3 crores 2 lakhs 975. This is net of refund. So here there has not been a substantial growth because we all know that there has been a decline, that the government had announced a decrease in the corporate tax, and today you have the corporate tax in the range of anywhere around 15 to 18, 20%. And on the individual taxation, the personal income tax, including the securities transaction tax, today stands at 2,67,593 crores net of refund. So this is an increase of around 74.4% when compared to the previous year. So even if you see on a CAGR basis with respect to 2 years back, it has grown substantially. And therefore, this is a very, very big positive news for India. So because any country where the direct taxation is higher is always bound to have a lot of a trickle down effect on the economy, because we have two types of taxation. One is the direct taxation, which is based on the income, and there is the indirect taxation, which is your GST, which is based on consumption. So the direct taxation is very important because a few set of people who earn may decide not to consume, and therefore that just goes to savings, and there's very little revenue possibilities from that. So one of the reasons that could be actually working in favor of a higher direct tax collection could be, number one is because the income tax has linked itself to the GST details. So a lot of the businesses in India are either on partnership owned basis or proprietorship owned basis, and we all knew that the tax filing for the individuals and the company never kind of matched. And today, because you have the big data analytics and the PAN numbers are linked between the businesses and your individual taxation, there's a good possibility to ensure that there is no suppression of the sales. Number one. And also the fact that a lot of your goods movement are linked to your check post, your FASTag systems, and a whole lot of things. You can actually see that the loopholes or the possibility of people to suppress income slowly is waning. That's one thing. It could also mean that there has been a mindset change. People are okay to be more compliant because the power of white money is multiple times higher than the power of black money. And today you also have the economy slowly formalizing with the use of United Payment Interface and then your Google Pays and all those things, which mean a lot of transaction is beginning to happen on the white space. And because you have the data available with the government, and you also have the government now populating details with respect to your investment in mutual funds and stock market transactions in your 26 years, which means the people know that the government is aware of this transaction, and so you have the feeds on the TDS direction coming from your bank deposits. So there's a very good possibility that the government very well knows what's the kind of an income that you are having, because there are also feeds coming from your credit card spends. So whenever the economy is formalizing, generally in any country, the direct tax collection increases, and we are seeing that happening in India as well. And when the direct tax collection increases, the need to issue bonds to fund your fiscal deficit is reduced, and therefore it has a much beneficial impact on the interest rates. And when there is a beneficial impact on interest rate, it always works in favor of the business. So the increase in direct tax collection is something that we need to celebrate, because all the efforts that we have been making all these years to make a formal economy is beginning to have a fruit. The next very positive news that has come out with respect to India is that the white collar hiring has crossed 3 lakhs after nearly 20 months. So which means it's a very clear sign the formal economy is picking up, and the hesitancy to add manpower is being shrugged off, one. And then it's also possible that the demand is actually coming back, and therefore when the employment rate increases, the possibility of crime reduces, there's a possibility of income distribution to the rural areas, and more importantly, there is a consumption that gets kicked in whenever there's an employment that comes up. The next important a sense of direction that comes out is from the real estate sector. Now we all know that real estate sector is a major employee in the unskilled sector, so it is a place where a lot of people who work as masons or loadmen and all those things, they are unskilled people, or they are not well educated people, and therefore the real estate sector provides a good backbone of employment for them. Now we have seen that for the first time in Q3 the housing demand has risen by 13%, whereas the supply has increased by only 8%. Which is good, because there was a lot of excess inventory available in the market, and then if it starts getting absorbed, there's a good possibility the real estate sector revives. Now another important reason why the housing sector is beginning to do well could also be because we have one of the lowest interest rates for the home loan, one of the lowest home loan rates that we ever had in the recent past. And a subdued interest rate, along with a pickup in demand, along with increased hiring, and the fact that a lot of the housing today is on a loan basis, can all have a contributory effect to a very positive formal economy. The next item, that's something we can be very proud of, and also the fact that it aids in increasing the formalization of economy, is that the UPI transaction has crossed $100 billion, which is 7,71,000 crores of transactions is happening through United Payment Interface, that is UPI. It could be your Google Pay or Paytm, or through your BHIM app, or through any one of your banking mobile apps. So this has suddenly become a major way of transacting and sharing the cost when people have an expense. This is going to be a very good thing that's playing out for the country, because it ensures that each one of your transaction gets recorded, and the chances for formalization of economy really increases. In my own personal experience, I have been speaking to a couple of the shopkeepers on the roadside and all those things, and look at how their life has changed. Because when I picked up a conversation with one of the chaiwalas, he was telling that earlier nearly 10%, just after the demonetization, 10% of the transaction used to happen through the QR code based payment system in UPI, and now he says it's around 40%. And he says the money that goes to bank through the UPI payment is all that is left for him and his home, because every other money that he collects as cash he ends up giving to his creditors, and then he also ends up buying his everyday this thing. But what goes to the bank kind of either stays for his home, or it also goes into his savings. And therefore a formalization of economy helps in a lot of ways to even bring the downtrodden up to a much higher level. The next important thing that can add a good amount of depth to the Indian bond and debt market is that the foreign portfolio investors have been allowed to invest in debt securities issued by infrastructure investment companies, real estate investment trusts, through an RBI circular. So this will definitely deepen the bond market, number one. It will bring in a lot of much needed money to your infrastructure and real estate. Now both these industries are huge capital expenditure involved, industries which involve huge capital expenditure, number one, and they also have a much longer execution period. Now both these industries definitely need access to low cost funds, and today the low cost funds come from the pension funds that generally operate in developed countries, or from the formal banking sectors in the developed Western world and the developed countries. So in allowing the foreign portfolio investors to get into the infrastructure investment trust and the real estate investment trust is definitely going to ensure a long-term availability of affordable debt to both these industries. Something that's been of great interest to me personally is that recently, for the first time, the personal loans have overtaken industrial credit. Generally, industries are the biggest borrowers. But what had happened after the COVID was a lot of these industries had taken forward, decided to go ahead and repay their loans. And for the first time, the personal loans has overtaken the industrial credit. And as of last Friday of September, the bank outstanding credit was 109.5 lakh crores, and the share of loans to the industry had dropped by nearly 26% from close to 28.3 lakh crores, has dropped by 26%, and the personal loan has increased by 27%. So disbursement to personal loan has increased to 27%, and that stands today at 29.2 lakhs, which is marginally higher than 28.3 lakhs that has gone to the industrial credit. So the reasons why the personal loan has gone up could be due to a couple of reasons. One of them could be that there is an increased consumer durable purchase. The other reason could be that maybe they are using it to meet expenses because of loss of job and revenue from business. I also feel that some of the personal loans that have been taken actually has gone into investing in stock markets. With that very interesting and intriguing note, we would like to leave you with some thoughts, and maybe you can think about what could be the other possible reasons and leave a note in our comment section. Viewers, thank you so much for watching us. Please stay put. We are going to come with the third part of the 13th episode of our India Shining series. We always loved your support. We look forward to your continued patronage. Till such time we come with the next part. Stay healthy and stay happy. Thank you so much.